All right. It looks like we have a good amount of people in here. So let's go ahead and get started. I know we're all very busy. So, welcome everyone. Thank you so much for joining us. We have just recently launched a new product. We are very excited about it. It'll be our automated financial underwriting. So, we will be walking you through that today. The game plan is going to be do some quick introductions of our fabulous host here. We will then dive into what the program is, how it works. We'll then explain why it is such a game changer for our agents. We will show you a real life example of the software. And then we're also going to give you some common examples of when you would most likely need to utilize this platform. We do have a Q&A section at the top there, so please feel free to write any questions you have as we go through this, and then we will get to them at the very end. So let's go ahead and get started. All right, we are really lucky to have a couple of hosts with us here today. So we are actually joined by our fearless leader. Jackson, if you want to explain your role here at Bond Exchange and sort of your vision for what we're doing.
Sure. No, absolutely. Thank you for the introduction, Taylor. Again, welcome everybody. I'm glad you all were able to come. My name is Jackson Cromer. I'm the president here at Bond Exchange. My role really involves, the full operational management of the organization. But then when it really comes to vision and how we are implementing technology to benefit our agents, and we really want to find ways to continue to make surety a profitable line for agents, but then expand the ability for agents to write, anywhere from a very simple bond all the way to some of the more complex risks, whether that's a contract bond or just a larger commercial surety bond. We want to be able to have a platform that can provide the full breadth of that. And we think that, we had a basically our credit underwriting that was all automated. And now we bring in, the ability to automate some financial underwriting, which I'm just really excited to bring to the forefront and to demonstrate for everybody today.
Yes, absolutely. Thank you so much again. We're so excited to have Jackson here. As you can imagine, he's a pretty busy individual. So we were able to snag him for a little bit of time today. My name is Taylor Mullen. I work here at Bond Exchange in business development. So I do agency enrollments. You might see me out at a conference, and then I throw these webinars for you guys. So thank you so much again for being here. We also have with us probably a very familiar face. Had him hop on a few webinars with me. Benton, if you want to talk about your role here at Bond Exchange and the various hats we have you wearing.
Thank you, Taylor. Yes, my name is Benton Leitz, and I'm in underwriting and business development as well. And I do want to note one thing. Taylor didn't mention this, but if you've seen her in the prior webinars, her last name has changed. So congratulate Taylor on her recent marriage.
Thank you for embarrassing me. Yes, I am now Taylor Mullen. You might hear me slip up and say Taylor Conley every once in a while. We're getting used to it. All right. Now that Benton has explained that to everyone, I'm now going to have him use his other hats to explain what automated financial underwriting is. What does this program mean to us?
Thank you, Taylor. So we are very excited about this new feature. It's Bond Exchange's state-of-the-art surety technology, allowing us to automatically, systematically review financial statements and underwrite that risk without the need for human intervention. What does this really mean? Time savings. Our system can instantly quote and issue bonds requiring financial review, while other providers may take hours or even days to get around to reviewing that. No one has time for that. So
Nope.
we've automated that process.
Absolutely. And the way we've been able to automate that process is to create some integrations. So a couple of these names might look familiar to you. We do have an integrations now with Intuit QuickBooks. So we have the ability to review customers' financial information through them. We're also working with the MasterCard to review cash and brokerage accounts. And then last but not least, we're working with Sensible as well to read and organize various uploaded PDFs. As this is Jackson's brainchild, I'm going to have him explain these integrations just a tiny bit more to us.
Yep. So with QuickBooks, you're able basically to log into your QuickBooks account. It will bring in the business financial data, and then we can utilize our technology to basically systematize that data and underwrite based off of various financial calculations. One thing to note just with MasterCard, that's not just MasterCard products, right? It is pretty much any bank that reports to their company called Finicity. It will allow us to bring in that data, the customer, and you'll see in the demo here, will be able to select the bank accounts that they want to connect and which accounts within that bank they want to basically provide the financial data for. Now with Sensible, it'll allow us to then upload a balance sheet and an income statement, and it will read all of the accounts, categorize them in the same way that we have our QuickBooks basically account mapping set up, and then fill in all of the basically the final financial side of things and the numbers, and we'll do the same very similar basically financial calculations off of that. So it's pretty cool. It was a long time coming as far as the mapping is concerned. A lot of hard work from some various sources, and just something that again we're just really excited about.
Yes, absolutely. As you can see, this will be doing a ton of the work for us. So very excited about that program. So let's talk about why this matters to our agents. Why is this helpful for you guys? Essentially, we have gone and made surety bonds even easier. I know, hard to believe, we already make them easy, but let's talk about how they are even easier now. We'll be spending less time going back and forth between customers and your bond provider. Sure, this has happened to you before. Customer needs a bond. You reach out to your providers. They send you forms. Customer fills out form, send it back. Form's wrong, goes back to the customer, and on and on. We are now avoiding that entire scenario. Much better for the customer. I'm sure much more exciting for our agents. Also have the ability to get bonds written quicker than anywhere else now. I know we like to think that all of our customers are very exclusive to us and would never dream working with another agent. However, sometimes that happens. So if they are shopping you and another agent out, you now have the ability to get that bond written quicker than anywhere else, and you are able to keep that customer, which is huge. Also allows customers to be applying for their own bonds and providing this financial data any time of day or night now. Imagine coming to the office on Monday, you just have an email that a bond was quoted, purchased, bound all over the weekend, and now you just have commission coming to you. Really hard to beat. So essentially what all of this means is that we have made surety even more efficient, and therefore all of our agents' favorite, even more profitable. Can't get better than that. All right. So now that I have talked your ear off, I'm actually going to stop sharing my screen and I'm going to let Jackson take over. He is going to show us an actual example of how this works. Okay, you have power now, Jackson.
All right. So we'll go ahead and we will hit screen 1 and we'll share. All right. And just make sure everybody can see here, it shows, is this bond needed in North Carolina? So really where I started here is basically this is just the first screen that you or your customer will reach as part of our application process. What we'll do is we're just going to kind of walk through what our standard application looks like, something that's very straightforward. But then given the size of the bond that we're going to be applying for, it's going to ask us to basically connect our QuickBooks account. Once we do that, we'll get the quote for this one. Then I'll show you what the MasterCard integration looks like, and then what the Sensible integration looks like. So we'll go ahead and we'll click yes here. And, really when we designed this application, we set this up just to mirror a phone call, a really nice step-by-step, kind of back and forth interaction between our system and how you or your customer would speak to an underwriter. It's really seamless and really straightforward, and just makes this whole process seem, just really nice, and it's more customer forward and provides a really great user experience. So we are just applying for a generic bond in this case. It's more for testing scenario, but we'll go ahead and say yes here. Business name, we're going to go Big Time Construction. We'll confirm the formation type of the business, how long they've been in business. So for this one, we'll go ahead and we'll just say 3 years. And then we'll get a phone number. Just going to throw some test data in here. Nothing too crazy. And we'll go Big Time at. And let's see here. We'll go for a nice little address. That is connected to Google Maps API, so it will verify those addresses as they come in. Just something that's, it's just nice to have. Helps a lot with just the kind of quality of the data that we're getting. We'll confirm if the mailing address is the same or not. And now we're going to go ahead and we've got some test customer to add in here. We'll go Mr. Thomas Gravely. And again, this is not live data. It is test data, so that is not a real social. All right. And so we'll confirm if Thomas's address is the same as the business. In this case, we'll just say yes. And it does give us the option. So if Thomas is not the sole owner and there are other owners that have more than a 10% stake in the business, we can add that owner as an additional indemnitor on the account. We'll go ahead and click no here. And now what it's going to do is basically bring us to our ability to connect our QuickBooks account. So again, for a bond of this size, we have some assets that we need to verify, and we've partnered with QuickBooks to bring that data in so that we can analyze it. When we click yes and log into QuickBooks here, we'll get a nice little pop-up that just, again, this is going to be the QuickBooks interface. And we'll go ahead and sign in. QuickBooks does have some nice two-factor authentication built in. So if you'll bear with me, that code should be coming to my cell phone here in just a moment. And it will go through the connection process. This does take just a minute as it's connecting those accounts. And once it is finished, that screen is going to close out, and we'll be able to continue within the application. So really what this is going to be bringing in is any of the reported basically balance sheet items and income statement items and map them to a specific chart of accounts. It is done now, and we can select the date that we want the bond to start. So we'll go ahead and we'll keep it on today's date and click continue. Now that this is finished, we receive our congratulations and approval for the following rate and term. Again, we applied for a $200,000, because again, just kind of generic bond in this case, but it set us up for a 1% rate on an annual basis. And we do have this nice option on a subscription. So we're able to basically break down those payments on just a simple monthly, we'll call it an installment, but it's a monthly subscription. It makes things very straightforward. Now we can continue through here and go ahead and proceed through the checkout. But before we do that, I do want to just show you all really what that MasterCard integration looks like, and also what the Sensible integration looks like. The processes are pretty similar, but it's just different data and a little bit of a different interface. So rather than bore you with a whole nother application, I've got these already set up. We'll go ahead and connect our MasterCard account here. And this one's going to actually open up right in the application. All right. So we've got Finicity, a MasterCard company. All of the data is encrypted through their process and their platform. We'll go ahead and click next here. It is going to ask us to find our bank. I've got a nice little test bank that we will search here. All right, FinBank Profiles A. And now by clicking next, we're just going to be taken to their login screen. All right. It's going to validate. Oh. I see. I had an S on there and I shouldn't have.
See, it's very, very secure, guys. Don't worry.
Now we're talking. Okay. Sorry about that, folks. But so now I have the ability to basically select any of the accounts that I have associated with that bank. So if I've got a Roth IRA, if I've got 401k, any personal investment accounts, checking, savings, I can include all of those as part of the underwriting for this bond. I will go ahead and I'm just going to check all of them just for consistency's sake here. All right. We'll review the accounts that we're going to connect. You have the option to add multiple. So if there is more, or if there are more banks that you would like to include or more accounts you want to include, you do have the ability to do so. And we're just going to go ahead at this time and click submit. So again, just like with the QuickBooks integration, it is just going to take maybe 10 or 15 seconds to connect those accounts and load the data into our system. And once it has, we're going to be basically prompted to the effective date selection. So that should pop up here in just a couple of seconds.
I think we should have
All
gone through
right.
the whole application again. I mean, I love
Yeah, it
applying
was
for
pretty
bonds.
quick, right?
Yeah, exactly.
So we can go ahead and again, just like we did before, we'll select our effective date. You'll see it's basically taking that data and loading, and we have a basically a new quote. Now you'll notice that this one is a little bit different on the dollar amount quote, and why that is really we have basically a new business that is applying for the bond, so the range is just a little bit different, and we take the basically years of experience into account and years of business into account. So we'll see that that's all taken care of here. And again, same monthly option, 1, 2, and 3-year approval terms. All right. And that brings us to our last integration as part of our application process, is for Sensible. So it's the same situation where we have, yes, we can log into QuickBooks here, or we have the ability to upload these documents. Now, before I kind of step into this, I do want to make note of something. This entire process really wouldn't be possible outside of the context of the way that we have our application built. So what's nice about this is while the application is kind of straightforward and it looks linear, it actually can take different paths and different steps. So if we didn't apply for a large bond, let's say $200,000 or $300,000 bond, we would just pass through just based on credit, because the amount is high and we have the ability to create some kind of like if then parameters within the context of the app. We're able to provide a customized screen and kind of customized selection based off of data we're getting as part of the application. So it's really flexible and really interesting way to kind of build this out and make use of it. Now I'll go ahead and we'll get these documents uploaded. It's going to ask us to upload a balance sheet, and we can select the date. Choose my file here. There we go. We want this balance sheet. And we'll click continue. And then the same with the income statement. So we'll grab that same file. Forgive me, I'm really bad about clearing out my downloads. I'll be honest. I really should do better about that. But we'll go ahead and we'll add this profit and loss statement here. And we'll click continue. Now, again, same process, right? It took those two financial statements, took that data, and when we click continue here, it is going to take that and evaluate it in the same way that we would the QuickBooks integration. So go ahead and click continue here. And really, it's one of the nice ways that we went about kind of mapping this out is, it does look at the different variables in the financial statements and allows us to not look at not just QuickBooks financial statements, but pretty much any balance sheet and income statement. Now, it looks like this one did submit to underwriting for approval. I apologize. I'm not sure as to why that happened, but given the context and information in the financials, this one should have come through. So I'll have to look into that. But regardless, it should have come in with basically the same rate that we had for this account in this submission. It's possible that it just maybe it aggregated when it should not have. But so we'll take this and we can continue through the checkout. It's actually very straightforward. So we'll click continue here. We have our indemnity agreement. Let's scroll through this and a nice little click to sign. I have Thomas's information and name there. We'll click I agree. We can confirm if they would like to mail the bond either standard mail or next day. We'll go standard. Confirm that the address where they would like the bond to be mailed. We'll go ahead and say this one. And then we can select the bond term that they would like to purchase. So if they want to do the monthly payment, or if they want to do the pay in full for the year, they can do that. We'll go ahead and just we'll do the monthly installment here, or the monthly subscription. They have the ability to pay with a credit card or bank account. And we'll throw our nice test card in here. And purchase.
System is like, are you guys running another fake bond in our as much as I love doing these webinars, I know they create so many
Exactly.
issues for
Yeah.
the underwriters. So thank you guys for your patience with us so we can show all of our agents how it works.
Yep. So this will it'll process the payment here. All right. And so now we're all set. We have a nice little kind of pop up if the customer would like to leave a review for us. And then you have the ability to download your bond, payment receipt, and then the invoice for the customer. So again, really straightforward process. I mean, I think we took about 10, 15 minutes to run through the 3 separate integrations, but from point A to all the way through the completion, I mean, we're talking maybe 2 minutes for a bond that would require some additional financial analysis. So really straightforward and really easy. But
absolutely.
Taylor, I will go ahead and I will stop sharing, and the control is now going to be back to you.
Okay. Oh, you're gonna have to make me the host.
Okay.
Let Jackson in one time, he takes over. I mean, what are we gonna do? You just hover over my name and then hit make host.
All right, you're golden.
Okay. So I will share my screen again really quickly, and we will get you through the end of this, you guys. All right, so now that we have talked about what this program is, why it is so amazing, and what it actually looks like, we are going to have Benton just walk us through a couple of the most common examples of when we would be able to utilize this financial underwriting.
Thank you, Taylor. We've pretty much created 4 simplified, like general categories, just things that'll be recognizable to our agents. We have license and permit, financial guarantee, hard to place, and probate. So we've also provided a few examples for each. For license and permit, things are commonly going to see are contractor license bonds, motor vehicle dealer bonds, or mortgage broker bonds. We see all 3 of those all the time. So diving in a bit deeper into when this feature will be utilized, over 50,000 for license and permit bonds, we're going to be asking for the financials for the business. Under 50K, we can do a credit alone, and those will be quoted just like normal on our system. And those can go up to 500,000. There are a few that actually go over 500,000, but it is pretty uncommon, so you probably shouldn't have to worry about that. If it's a new business, of course, they're not going to have business financials created yet. So we'll use that MasterCard integration in those cases for cash asset verification.
And if I could, just real quick, in regards to that, we do have, and he mentioned in most cases, right? So we do have some bonds in here that are automated just on credit at up to a higher amount. So just for instance, like mortgage brokers and title agents, we'll run credit on those, and they can seek approval for bonds up to 200,000. And you are still able to do this integration for bonds of higher limits. It's just not auto approved. We'd still want a human to look at some of those bonds that are at those larger amounts.
Absolutely. And thank you for noting that, Jackson. Yeah, again, these are very simplified, generalized examples. There are exceptions and nuances here and there. So moving forward, financial guarantee, a few examples of those are tax bonds, health club, or school bonds. And for those, they are a bit riskier than license and permit. So we're going to ask for financials in most cases over 15,000 and can quote in automated fashion up to 250,000. And then again, for new business, we're going to use that MasterCard integration as well. And then moving on to hard to place bonds. These are the highest risk out of the 4 categories we have listed here. A few common examples of those are wage and welfare bonds, utility deposit bonds, and lottery bonds. So for those, we are going to request financials at any limit over 10,000 and can quote automatically up to 100,000. It's very rare these are going to be over 100,000, but it is possible and we have seen it. New business, again, we're going to use that MasterCard integration as well here.
MasterCard quickly becoming our favorite of the vendors for this underwriting.
And moving to probate, a few common examples of those are administrator executor bonds and conservator and guardianship bonds. And as Taylor said, MasterCard is becoming our favorite. It sounds like for these, it's not going to be a business. It's going to be an individual applying for the bond. So in those cases, we definitely will need to take advantage of the MasterCard integration here. For administrator and executor, that's any limit over 250,000. And for conservator guardianship, that is going to be any limit over 100,000. And that is about it.
And I apologize, Intuit, QuickBooks, and Sensible, we also love you. Those are some of the most common uses of financial underwriting. Again, we just wanted to give you examples of bonds that you might be familiar with so we can understand when this might be helpful for you. All right. We have shared a ton of information with you guys. So let's see if we have any questions and we can answer or clarify anything. All right, I'm going to throw this question to Benton and or Jackson, whoever wants to hop in here. Does your system quote BMC 84 bonds or performance bonds?
Absolutely. Yes, both of which can be quoted on our website. Performance bonds will need additional review in most cases, but BMC 84 bonds can be quoted automatically on our system.
And to add some more context to it as well, we will be doing a webinar, I think, within the next couple of weeks on an updated program for BMC 84 bonds. So stay tuned for that. It's gonna be actually pretty enticing. And we will be integrating the basically the financial analysis segment into our basically our performance bond application. That one is shortly on the come.
Absolutely. And I want to answer questions. It's actually something I get often, and I kind of talked about it in the beginning. When we were talking about agents or customers being able to have the ability to quote bonds day or night, some of the ways they would be able to do that is making sure that they have access to those online quotes whenever they need to. So if you are an agent with us, you want to make sure your book builder profile is filled out and active so they can start their applications there, or you can send out that shareable link to anybody via text, social media posting, email signature, whatever you want. Again, that gets them right in the application. Or again, if you want to install Surety Pro on your website where they can start the online bond quote. So those tools do just make this process even easier because again, they can just start that application immediately. So I figured I would address that because it's one of the most common questions I get. Okay, next up, we have a question from Jen here. Is it possible to get a $4 million bond? Would it have to be done in separate bonds to equal 4 million?
So no, we would not have to do it in separate bonds. Whenever you go above those thresholds we talked about earlier, that's just going to mean it requires manual review. So you can submit it just as one application, and our contract team will take a look at it if it's a PMP bond or if it's commercial bond, we'll have our commercial underwriters take a look at it.
Yeah, absolutely. So it doesn't need to be split up at all. You can still apply, can still go through the basically the QuickBooks integration, the MasterCard integration if it's a newer business, or upload financials through Sensible. Again, it's just going to require someone to take a look at it.
Perfect. We have a question from Don. What is your limit on performance bonds? This ties in perfectly.
Sure, we have absolutely no limit on performance bonds. We have an unlimited appetite. We can take a look at any submission. But Jackson, did you have something to add there?
Yeah, I was just to say when it comes into the system and basically the kind of tiers for approval and additional information, we do have basically it's a credit program that goes up to 500,000, and then the integration with these financials for projects over up to $1 million. When you get over $1 million, we're going to need to look at at least just some additional information, and it won't auto approve, but our system is possible of automating it up to $1 million. There's just kind of some additional information and those different at that $500,000 threshold to up to $1 million threshold.
Absolutely. And I just want to verify when we aren't doing automated financial underwriting or automatic credit underwriting, our team will get back to you within 24 hours. So we have an amazing group of underwriters who you can reach via phone, you can email us or you can chat with us. So if there's a rare instance where we're not doing it automatically, we will still be doing it very quickly for you. We will never have you going back and forth for weeks to get a bond written. Okay. Benton, I'm going to have you tackle this next question.
So this is from Denise. Financial guarantee bonds. Is there a market for payment bonds for contracts for loans? For example, a guarantee of performance and payments to a lender. If I'm understanding this correctly, not really. If that's when a bank is saying, "Oh, we'll give you a loan if you get a bond to guarantee repayment of that loan," no, there would not be a market for that. That is inherently adverse selection. That's the bank saying we don't want to extend this line of credit without a full guarantee that we'll get every dollar back through a surety bond. It's pretty much a polite no to providing that line of credit. At least that's how I like to look at it. And Jackson, did you have anything to add to that one as well?
I've seen it in some circumstances where you have either an insurance company that is withholding a claim payout for their, like, a general contractor who's going to be performing the work to provide a bond. I mean, generally that's going to be on residential work, and we have a couple of markets that have been able to facilitate that. But again, as you mentioned, and I agree, when it comes down to a bank or a formal lender wanting a bond to guarantee repayment of that loan, those kind of like those financial guarantee obligations are outside of what a traditional surety market's going to be willing to extend.
Okay, fantastic. Next question is also from Don. On the BMC 84 bonds, does the applicant have to be a U.S. citizen?
Don, yes, in those cases, they would have to be a U.S. citizen, definitely.
Okay, give it another second, see if anybody else has any questions. In the meantime, just a reminder, again, this will be recorded and sent out to everyone. I would say within 24 hours, you guys can expect it in your inbox. Also, we post all of our past webinars on our YouTube channel. So if you ever want to look anything up there, Bond Exchange, search us on YouTube. Okay. Don't see any other questions. I'll give you guys a second. Benton, Jackson, want to add anything to our agents here before we wish them adieu for the day?
Ooh, it looks like we did
Nope.
get one more. Do you write international bonds? It's from an anonymous attendee, but we don't have markets, at least within the international space. We're kind of strictly tied to the U.S. And some of the territories, but it's certainly an area of interest. But it's currently no, we don't write anything internationally. If I had to just any kind of closing thoughts, just thank you for everyone who attended here. I appreciate everybody extending some time out to allow us to show you some of the kind of new technology that we're bringing into the market and some of the updates that we have going on here at Bond Exchange. It's been really fun to work with a team and build this technology with them, and really be part of that and work to kind of continue to bring the industry forward as much as we can. So we're excited to bring this value to our agents, and we hope that you guys are excited about it too.
Yeah, absolutely. And again, thank you to Jackson, a very, very busy man. So we're happy to have him on today. And you can tell he has the enthusiasm to really talk about these topics as well and bring it to our agents. So thank you to Jackson and Benton for your time. I will allow you get back to your regularly programmed job. But I will see you guys on the next webinar. It'll be just a few weeks here, and look out for that invite. But otherwise, thank you again for your time, and we will talk to you guys soon. Have a great day.
Thank you, everyone. Have a good one.